Welcome to Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Yellow Tunnel and TradeSpoon. And today I'd like to go over the Black Swan Theory and also current market conditions and the key support and resistance levels, and overall how to handle current rise in the volatility. For those of you who are new, you can read my brief bio. I'll leave that slide quickly. Also, if you guys can take a look at the disclosures, it would be great if you can read them or pause the video just to make sure you can see the disclosures. Very important to read. All right, so let's talk about Black Swan Theory. So I'm reading a book right now, The Black Swan Theory by Nassim Nicholas Taleb. It's a great book. It talks about the Black Swan Theory. The definition of Black Swan Theory, usually there is an event, an unknown. Usually you cannot predict the outcome of the event nor the timing of the event. So there is an element of surprise. Usually we do have a hindsight bias where we try to rationalize why did the event occur, what could have we done to be more prepared for the event, how do we predict the next sell-off in the market, when the next recession will start, and trying to find the reasons. The event by definition is an outlier. If you look at the statistical analysis and look at the bell-shaped curve, these are events that have 2 sigma, 3 sigma standard deviation moves, and by nature are unpredictable. So how do we trade in that kind of environment? We had an FOMC meeting yesterday. We knew the timing of FOMC, but not everybody was prepared for 2% sell-off and then quick recovery the next day. My approach is very important to be flexible, right? You have to be flexible in your opinion. Market sold off yesterday, reached 295 level on SPY. You look at the key support and resistance level and you realize that support can become resistance very quickly. And vice versa. Resistance on SPY can quickly become a support. So you have to be flexible in your opinion and quickly adjust to current rise in market volatility and try to trade with the trend. Once you have a confirmation where the support became resistant or vice versa, you need to change your view on the market. You need to be disciplined. We had a webinar yesterday. I encourage you to review what it takes to be a disciplined trader. Dr. Maneker talked about being true discipline, not a temporary discipline, where you have trading plan that you follow and certain goals that you are concentrating on overall process, right? You can easily be in spending too much mental energy and focus on your P&L, and instead of looking at the P&L to drive your decision, you should concentrate on the process, meaning concentrate on your trading plan, look at your target gain, look at your stop losses, trade small, trade often, and be flexible in terms of the opinion that you have on the market, because the market can quickly move, go from bearish bias to bullish bias and vice versa, and have long-term approach. Ultimately, rise in volatility happens relatively rare. If you zoom out and you look at the long-term chart and long-term your trading career, if you're a disciplined trader and you follow your trading plan, then you realize that sometimes you will have certain trades that will go against you. But if you zoom out over a long period of time, if you're disciplined, you're following a system that gives you high probability of success, then you can withstand the current rise in volatility. So I'm going to leave this toolbox. I spoke about this last week. If you watch my short videos, I encourage you to follow these toolbox that will help you deal with the current market volatility. Labeling is very important. Research shows that when we document our thoughts and labels in our trading journal, it helps us to be prepared for the event. So trading journal is very important. Negative scenario review. Before the FOMC decision in our live trading room, we went over different scenarios where the market can be. Live trading room is very helpful. That can help people share ideas and empathy. And these are again a different set of tools that you should always look, especially during events once outliers do happen. Very important to look at the 200-day moving average SPY, 50-day moving average SPY. I'm going to shortly go over these levels. Hedge your portfolio, looking at the raising cash, and if you do have stocks or ETFs, consider selling calls if you do see overhead resistance in the market. So let's take a look where those key levels are so we can follow our discipline. Now I'm looking at the stock forecast toolbox flagship product at TradeSpoon. This is a neural network optimized for 10 days. I'm looking at 10-day prediction for today. Market, the model predicted overhead resistance 300, supported 295. We had kind of a bad news, good news. Some of the economic indicators that shows slowing down in ISM manufacturing. That gives hope to the market that the interest rates will continue to be lowered in the future, and people are following their hope with the idea that interest rates will be lowered and the market is at 300 level, slightly higher. So we're seeing market model did a good job predicting overhead resistance. If you're a disciplined trader, you would consider going short at 300 and hedging your portfolio. I don't think we, I think it was yesterday's sell-off and reaching the 295 level yesterday. The stop at 300 between 300 and 305 level in SPY is probably set short term. So I would suggest going short at 300, have a clear stop levels in case the market continues going higher. And same thing when the market reaches 295 level, go long again with the clear stop levels. And these levels will give you high risk versus reward ratio trades. Looking at the seasonal chart, this is a different model optimized for the next 50 days. The model ran on Sunday at 6 p.m. Central. 3 out of 4 prediction on spiders gave a lower. Um, you want to utilize statistics every time signal is generated. You want to ask yourself a question: what is the probability of the success? Here you can see on average 80% accuracy that once 3 out of 4 predictions are lower, then 80% accuracy that the stock market will be lower in the next 50 days. We can see from the seasonality point of view that end of July, beginning of August, usually there is short-term correction. So expect August to be volatile and potentially retracing to 50-day moving average or 200-day moving average on SPY. And I think they're a key level. So now I'm looking at the charts. This is Nadex, my Nadex account, looking at S&P Mini September contracts. We've seen all-time high is around 290, or is it 3029, right? So I'm looking at the 3029 level. So we're at 3029 level. I think this is short term is overhead resistance. I'm not sure if there's any positive news in the market that can propel the market above that level. So that's the short term overhead resistance. Consider shorting the market at 3020 level as we're approaching the market right now. Long-term support is 2960. We had a support at 2980. We broke through that support yesterday. So I think that's the reason why I think short-term 2960 would be a support. This support spans all the way to June 21st. So we're going back to June in terms of the support. This also corresponds to 50% retracement between all-time high and the 50-day moving average. So a 50-day moving average is around 2920, 2900 on SPY and the S&P Mini and S&P Mini. So this is your 50-day moving average is your next level of support, 2900, 2912. If the 2960 level is breached. So again, as a disciplined trader, you can go long at 2960, you can go short at 3020 with the clear stop levels in case the market breaks these key support and resistance levels. And the next level of favorable risk versus reward setup, I would say 2920 was the same idea. I encourage you, final thought, I encourage you to look under quick navigation and free weekly webinar recordings. We just recorded a webinar. This is what it takes to be a disciplined trader. I think this is a very valuable material. Dr. Maneker we're lucky to have Dr. Maneker join us and share his thoughts on what it takes to be a disciplined trader. He's a clinical psychologist and also a professional trader. That's all I have for today. Thank you very much and enjoy If you don't hear me, then enjoy the weekend. Thank you.